2019 was jam-packed with news, with dozens of news publications, from industry insiders to the mainstream press, covering the daily developments in the cryptosphere. But amidst the constant barrage of price analyses, new asset listings, regulatory advisories, crime coverage, and trade talk, there were a few larger news narratives that dominated the space. I'm Ron Friedman, the editor-in-chief of BLOCKTV, and these are my top 5 news stories for 2019, starting with number 5. In March, Bitwise Asset Management published a presentation that it had delivered to the United States Securities and Exchange Commission as part of its application to create a Bitcoin-based exchange-traded fund. In it, Bitwise claimed, among other things, to have identified that 95% of all trading volume in the Bitcoin market was artificially generated, mostly by wash trading on exchanges. The report sent shockwaves through the industry. It was aware of the phenomenon, but perhaps not of its extent. The revelation attacked the very foundations of the space, casting it in an extremely poor light and providing ammunition to its fiercest critics. Though the manipulative practices have not ceased completely, the Bitwise presentation and the reporting done in its wake did manage to raise awareness of the issue and produce the beginnings of a solution. For one thing, it created a 2-tier system of exchanges, for the most part separating the trustworthy exchanges from the manipulators, and introduced terms like real trade volume, trust scores, and liquidity rankings. The problem has by no means been fixed entirely, but it seems that sunlight has proven a good disinfectant so far. In late September, research firm Almeida found that only 66.4% of all crypto trading volume is wash traded. Much of 2019 was spent in what the industry and its chroniclers called crypto winter, a long period of time that saw total market cap down, investors retreat, new projects shelved or shuttered, and general interest diminish. It was a blow to an industry that just months earlier was flying high and seemingly unstoppable. The jury is still out about whether crypto winter is behind us. Though the second half of the year saw the price of Bitcoin and other leading assets recover somewhat, we are nowhere near the euphoric highs of the past, and there are indications that the late rally could have been a false spring. As the saying goes, that which doesn't kill us makes us stronger. Crypto winter left us with some lasting realizations, perhaps most importantly, that the retail market is too fickle to build upon. The second half of the year saw focus shift heavily to institutional investors, with a flurry of announcements and activity, most notably the Intercontinental Exchange, which took advantage of crypto winter to purchase crypto assets at a discount for its institutional cryptocurrency trading platform, Bakkt. One crypto company that we couldn't imagine 2019 without is industry giant Binance. Led by the extremely active and communicative CEO Changpeng Zhao, the Malta-based exchange grew to dominate the sphere. Not a day goes by without an announcement of a new product, service, or development by the Binance team and its multiple Twitter channels that barrage its followers at a dizzying pace. The company even survived a $40 million hack this August, relatively unscathed and largely due to CZ's assurance that funds are SAFU. Margin trading, a decentralized exchange, and a quick shutdown and reopening of the company's US operations are just examples of the type of moves the company took in stride in recent months. Operations on such scale seldom come without controversy, and CZ has known his shares of those this last year. But as we head into a new year and a new decade, it seems there is no stopping this crypto powerhouse. If there was any doubt that the future of digital assets lies in the East, China put them to rest, with Beijing flexing its business and regulatory muscles, sending ripples throughout the cryptosphere. In the last quarter of 2019 alone, we saw the crypto markets pump and then crash over mere mentions of blockchain and crypto by the country's leaders. The concentration of crypto businesses and particularly mining operations in the communist-led state makes it a make-or-break actor in the industry, highlighted by the ongoing trade and innovation war it's waging with the US. The most significant development on the Chinese front was the announcement that it had developed and plans to roll out a digital version of its national currency. Though the digital renminbi is by no means a cryptocurrency and has many critics concerned about likely state surveillance uses, it does fall under the digital assets category and as such is expected to have an impact on the market. Already, China's announcements have started a race towards CBDCs in other jurisdictions, which will only heat up in 2020. Finally, the biggest story of the year, in my opinion, is the entrance of social media giant Facebook into the sphere. With a promised 2020 launch, Libra is geared to be the daddy of all stablecoins with a potential user base of billions. Facebook may try to distance itself from the project, operating through the now diminished Libra Association, but Mark Zuckerberg's fingerprints are all over the project. The recent announcement of Facebook Pay only strengthens the connection. The emergence of the Zuckbuck also poses a serious test for US regulators. Lawmakers and officials have to decide whether to embrace and adapt the technology or risk falling behind in the fintech arms race. These grand narratives are sure to continue and accompany us into 2020. BLOCKTV will be here to monitor and update on them.
For more news and updates, follow us on Twitter.